tended to break out of the low, break below the low, and go down. And then it went sideways for a period of time and, kind of slipped sideways for a period of time. And then it went up and broke the high for January. So now that's not necessarily, the pattern that will happen in any given year. But when you see the breakdowns like that, and in this case you had 4 full points or 400 pips, that's not too bad a trade if you were taking the breakdown from the January low. We're going to skip through some of these charts rather quickly because I don't necessarily want to dwell on any one of these. These are older charts, but I want to make sure you have kind of the concept in mind of what happens in January and what happens in the rest of the year. We now want to show you we put the arrow. Let's switch. I'm going to show you what the euro looks like because the euro is probably a key gauge of what goes on in the currency markets overall. There's January 2008. You can see in this case we had a situation where the euro kind of slid sideways in January, kind of formed a bit of a range type situation there, and then we had a situation where the price after, into February and March, where we started to see the market go up, broke the January highs, and then continued on up. So in that case, the breakout of January looked pretty good, not too bad a situation at all. And when you can gain as many points as you can see here, makes the trading pretty worthwhile. I'm going to skip through some of the other markets also. Again, I'm not answering or asking you to keep an eye on all these precise points and just get kind of a feel of what January looks like versus the rest of the year. Here's January in copper 2008. We're doing a little history study here just to show you kind of some of the same things that happened with the euro chart. If you remember the euro chart, how it looked, copper is like a copy of the euro chart because it performed somewhat the same with the highs breaking out and the market moving on up higher. Now we're going to turn also to crude oil, another important market. You have the same type of situation here in January, just to give you an effect of what January looked like on this chart. That out and show you that January did have a situation where it was able to break out similarly to what happened to copper. So you can see that the breakout of the January highs can be a pretty good clue as to what could happen in the market during the rest of the year. I shouldn't say the rest of the year because, as you remember, this is the infamous climb to $147 a barrel oils, and that's kind of an unusual circumstance no matter how you look at it. And then the market did, collapse during the rest of the year. But that's what happened where you can see the breakout of that high and how it set the tone for the near term at least. Now we're going to switch now to another market. Gold. Gold a little bit more erratic, had a little bit more wilder situation in 2008, January 2008, but still we had the prices right in here. Gold broke up out of that range, and when it did break up, potentially setting up a pretty nice trade because it broke out of the January range. Again, looking at concepts, not necessarily looking at precise prices here. Soybeans, same type of situation we had in January 2008, where the gold price or the soybean price, was sort of sideways when it broke out above the highs, made a nice run up. Would have been a nice trade, and of course that eventually led to a situation where you had the prices go back down and up and so forth. But initially, you had a nice run based upon that run right there. And then the one that everybody likes to look at, and of course 2008 is kind of a wild year in general. And I don't know if I exactly have the January there, but we'll say that this is about where January looks like with that rectangle there. You can see at that point we were coming out of 2007 in the all-time highs and the market hit lower. It took quite a while in this case for the market to break down, but when the market did break below the January lows, look at that ride that we had there in the fall of 2008, which I'm sure that everybody can recall that particular period in history because it was kind of dramatic. Now we're going to 2009, review that situation again. Again, I'm not trying to make a big point about specific things, but I want to show you kind of the price action and what happens after January. In this case, we get back to the US dollar index, which is kind of a key market. In this case, again, the market broke above the January high, had a little run, and then moved back down. Again, not conclusive evidence that the market is going to do exactly as it did in January throughout the whole year, but breakout can get you off to a good start for the year. When we look at the euro, that would, of course, as you would expect, would be pretty much the opposite type of a situation where you had the euro dropping down during January and then continuing on lower after it broke through the lows for January. So, each one of these markets that I'm showing you are kind of the key markets here and showing you just simply the key concepts that we're talking about here. Crude oil, as you recall, we had quite a situation in crude oil for a while. We had the price of crude oil sink all the way down into copper. I guess I have copper up here first. Copper was sinking. The economy was sinking. Everything was kind of doom and gloom at that time, and you'll see that copper was another situation where you had a price that eventually was able to go higher once it made the breakout above that high. Again, with copper, like some of the other markets, you can see that we also have a situation where we made a breakout. Get the right tool here. Made a breakout right here above the highs and made a run higher. Now, whether this will happen in all cases, in all markets, one can never say, but this is kind of a pattern that you can look for with the January effect. Now we're at crude oil. As you remember, crude oil in this case right here was a situation in this particular period where we had a dramatic happenings going on in the world of oil, prices dropping to into the lower 30s. Then you get the breakout above the January high, and when it broke above the January high, you had a situation where the market ran up considerably higher. Just to review again a couple of other markets. Gold, again, looking at a concept on the January market where it was in a situation where it was potentially, could give you a potential signal based upon the breakout. And let's see, got a wrong signal here. Let's take that one out. Just point out that we did have the breakout above the January high, and when it did go above the January high, we did have a situation where the market eventually, took off and moved sharply higher. As everyone who's been in the gold market always is of high interest, and that is the E-mini. The E-mini market was a situation where we had, some erratic action, as you recall, going on, and when we look at what happened in the E-mini in 2009, beginning of 2009, you had a